Hello, this is the Financial Accounting Tutor back with another financial accounting problem. This problem involves depreciation. So what we want to do is we want to record the initial purchase of this equipment and we want to record the annual depreciation. So let's read the problem. Liliana spends $20,000 cash on a piece of equipment for use in her restaurant. She plans to use the straight line method to depreciate the equipment over 5 years. She expected to have no value at the end of 5 years. Okay, good. So what is the straight line depreciation formula? The straight line depreciation formula is, because we're going to need that, line depreciation formula. It is going to be the purchase price minus salvage value divided by estimated useful years of life. Okay, there we have it. So what is our purchase price? Our purchase price is $20,000. And our salvage value is 0 because it says it has no value at the end of 5 years, so we know it's 0. And the estimated useful years of life is 5 years. So let's go back to our formula. So it's going to be 20,000 minus 0 divided by 5. So the annual depreciation is going to be 20,000 divided by 5, which is going to be $4,000. So the annual depreciation is going to be 4,000. And technically it's not dollars because it's a non-cash expense, but it's 4,000. Let's just say that. So let's record the initial purchase. So to record the initial purchase, we got to figure out how much did we spend and what did we buy. So Lillian spends $20,000. So what we do know is these are going to be 20,000. We do know that. We do know that. Now what accounts is it going to be? How did she pay for the equipment? Well, she paid cash. And anytime you pay cash, it's always going to be a credit. Anytime you pay cash, it's going to be a credit. Anytime you receive cash, it's going to be a debit. So in this case, this is going to be a credit. All right, now what is the debit going to be? Well, what did we buy? We bought a piece of equipment. So equipment is going to be the debits. Now, we've already calculated the annual depreciation is going to be 4,000. So we know this is going to be 4,000. Now, what accounts are these going to be? And these accounts are always going to be the same. The numbers will be different, but anytime you record depreciation, the same two accounts are always going to be used. So this is going to be depreciation expense, and this is going to be accumulated depreciation. Now, accumulated depreciation shows up on the balance sheets. And in future videos, we'll talk about how accumulated depreciation shows up on the balance sheet and all that stuff. But for now, just remember, depreciation expense shows up on the profit and loss, and accumulated depreciation shows up on the balance sheet. So once again, just to reiterate, when you're doing any type of depreciation problem, number one, when you record the initial purchase, you need to figure out, how do we pay for it? Did we pay for it cash or did we take a note out? How do we pay for it? And then, like I said, in this problem, you pay cash. Anytime you pay cash, it's a credit. Anytime. So you automatically should know cash is going to be a credit. And then the debit is going to be, what did you buy? It could be equipment, could be, could be a building, but that's what the debit's going to be, what you bought. And the depreciation, anytime you're recording depreciation, it's always going to be depreciation expense and accumulated depreciation. So once again, I hope you enjoyed this video. Please subscribe so you don't miss out. I want you to pass your financial accounting class. I'm going to be making a lot of financial accounting videos because I understand how hard financial accounting can be. I'm trying to make it as simple as possible. I'll see you in the next video.